Hi friends, good week. How are you today? How was your weekend? I hope everything is okay and that you are ready for another interesting week. Well, previous week finished very interesting. In the club we did some uh, great things, some good investor style closed, some still running, and it seems that very interesting period will leave very interesting period in the market. As I discussed about like 2 weeks ago, after the QE number 3 and bond purchase from Draghi, if you remember, I said that all the good things that could happen already behind us. Now it's time to see how they're going to affect. As so far, we can say that not too well. And the majors like the euro dollar mainly and the pound dollar, which started during the last days, are pushing down, and it might be just the beginning. There's another very interesting pair that we are going to discuss this week, and that will be the New Zealandian dollar, but a little bit later. So let's begin. Let's begin with pairs that I discussed for a while ago, and I still think it could take some time before we get something big from here. That's the euro against the Australian, and the pair is moving, well, kind of moving down, but in very tight range. And the thing is, what's going to happen next? Based on the daily chart, we can see that there is a bearish pressure, and the pair could go and push the whole way to the middle of the last up move, which means somewhere below the 121. Could happen. Very logical even. But if we take a look on a weekly chart, then on weekly chart there is still bullish pressure. It's double doji finished now, right? Only now, double doji. Stochastic is overbought, but we know what could happen if it crosses up and play on the top. RSI crossed the 50, and MACD has a bullish slope despite of this double dodging. That's normally bullish signs, and that's why I say I will not be surprised if the Euro Aussie, before making the down move, will push first of all higher. And if we take a look on the levels, then it could push back to, well, above 125 first of all, and even 127 or even 128. Right? That's very important levels. And of course we have this huge level around the 129, 130. I'm a little bit doubtful it could happen straight, but again, if the idea that I had that Australian dollar will crash and the markets will crash, and if it's going to happen, euros it could push higher first of all. But this, well, we are way above the resistance number 3 on a daily chart. That was number 1, number 2, number 3, right? Each of the higher could be number 4 and 5. Then the pushback will be very strong. We should also remember that we have 20 candles right, so the lower Bollinger Band has to be reached. And in case it pushed higher first of all, then it will not just reach but also crash through that. So only time will tell. From other side, as I said on the daily chart, it could turn to be just a flag and then a push down back to 121 or even lower. Personally, I would not be surprised if we will go back to the 120. Personally. Why? Well, if we take a look on the 4-hour chart, and at this divergence level, right here, this divergence that was created right here, from this area, that's actually 121, from this area, there was, no, sorry, here, that's the beginning. See that? That's the one I'm talking about. That's a little bit below 120 even. Here the divergence started, right? A divergence started with a double bottom, a little bit even lower, and from here the price has never pushed back. Now we are pushing strong up, and this area will be retested later or sooner. That's why I'm on the opinion, if the bearish attack comes right now, right, after some flag and cross down and going through, it could take us the whole way back to the 120 area approximately. So we need to see. In case it pushes higher, then as I said, we have the next level to watch. This daily divergence will be a monster for a down move when the right time comes. Maybe it's not the right time yet. By the way, if the weekly chart makes the push up, then it's going to be classical bend to bend move, which is also will be very bearish sign. Anyway, for long run, I'm on very bearish opinion. I don't think we need to go and buy here. Well, we get a swap, a wonderful swap with a sell, so good idea to hold it for a long run. And remember, it could take several months, but as long as we get the swap, right? Good. So Aussie franc should follow the Euro Aussie, and well, if we take a look on the weekly chart, we get pretty much the same. Not exactly, but pretty much the same. Could it push a little bit lower? Yes. For until it creates some weekly bullish hidden divergence. Not yet, but it could go and happen. On the daily chart, very logical that it will cross down below the current area, go for another divergence level, and the next level we'll have to watch are somewhere like here, 096, 095, then maybe in 093 even. But the lower we push here, the bigger the retrace could be. If it does not make this bearish scenario, instead of that making the cross up, well, same story. I'm on the opinion that it could be even as high as the parity level, or even higher. Definitely, again, here we also on the buy, we enjoy the swap, and from my point of view, for a trade that for a long run, it's worth it. It's worth it. You can make several percent profit thanks to the swap for a long run. So why not, right? Why not? Good. And now let's go and see the opportunities that we have for this week. I will start with the short opportunities we have. Dollar yen, I'll explain two scenarios we have here. First of all, on a daily chart, we have a bullish divergence with a bullish engulfing, which is a wonderful sign. But we can see that this resistance around the 78 still holds. And I do want the dollar yen to hold above this level in order to push higher back to 79 or even 80. Then on 4-hour chart, what do we have? We have had a bearish move, then a bullish divergence, right? If we take a look, this is resistance number 1 area. That would be somewhere around here, resistance number 2, and that could be this area number 3, somewhere around 78.50 or even higher. If we don't take this number 2 but this number 2, then number 3 will be even here. I would be not greedy and aim here, and then I go for 1-hour chart. On 1-hour chart we have a bullish convergence. If you pay attention here, that's a bullish convergence, right? From this top to this top, or even from this top, it does not matter. And right now this push down should be limited, and then the dollar yen should push higher. For short run, you can go and look for opportunities on the 1-hour chart or even 15-minute chart. Whenever you get your bullish divergence to buy anywhere here. And by the way, the bottom for my point of view should be 77.60. If it breaks above it and closes above that, that's a warning sign for this convergence. So again, 77.60 or so. That's the bottom. Should be accepted. From here, it should go and make the push closer to 78.50. For long run, right, there is a trend line on a daily chart here, as we remember, and a resistance around 78. It has to place itself above it in order to gain momentum to push higher to around the 79, 78, 70 to 79. I'm on the opinion it could happen, and as we know, dollar yen tend to push higher when it comes to the floor, and this level around below the 78, closer to 77, seems like a floor that holds several times in a row. So it's something to pay attention to. The next very interesting pair that I have on the list to follow is the Aussie Kiwi. I was thinking that right from this bottom, Aussie Kiwi could gain a bullish momentum and push higher. It did not, and now it's pushing down. If we take a look on a weekly chart, what do we have? We have a clear Bollinger Band breakdown, right? And right here we will get somewhere around the 123. We will get a Bollinger Band duplication, 123 or even a little bit lower. That's a duplication area for the Aussie Kiwi. It's also band to band moves, going through the Bollinger Band. It's going to create a bottom there. Now I do want it to push for few more days down, because after this break we have had a retrace, but after this break we never had a retrace, and if it pushed for few more days, we're going to have here on a daily chart monster 20 candle ride with a bullish divergence, with RSI that might come to extreme, right? RSI which might come to extreme, and then we can go and aim the whole way up to the trend line, and here we can talk and discuss about more than 400 points up. So Aussie Kiwi is definitely worth the attempt. I would prefer to go here investor style, and if you want regular style with a stop loss, then give it a chance. Don't set stop loss of few like 20-30 pips. It will not work. Here you should give it a chance, like 500 or 600 points stop loss, just for protection, right? Now what should we do in case that the Aussie Kiwi retraces up right from here with some surprise during the weekend or so? Could it happen? It could. And if it happens and then finish the daily chart with a bullish candle, you can begin the attack right now. Pay attention for the lower levels we discussed, but if it makes a false break right here, that's a sign that something could happen already, and that's something worth to pay attention to. Anyway, I think that I'm sure, I'm not saying, Aussie Kiwi is creating a bottom. I wish it can go for 123 or even a little bit lower, because then the retrace will be big, and the positive swap, buying Aussie Kiwi, should be a positive swap, and you would gain money for that. Something to remember is that on Tuesday we'll get a cash rate decision in Australia, right? And the expectations are talking about releasing it as it is, right? For the 3.5 interest rate to remain as it is, but there are rumors that they might begin to cut it, and I'm among the traders that I'm sure that at the end they will cut it. They cannot hold it so big while the whole world is kissing the zero with the interest rate. They just cannot, and if they will, it will just harm them for the long run. So anyway, the cycle is going to happen here, and it's only question of time until we get this move. Now pay attention for the Aussie Kiwi. Seems a really good opportunity. A few words about the euro dollar and the pound dollar. Well, I still think the euro dollar has room to go, but for that it has to break below the 200 moving average. Breaking below the 200 moving average on a daily chart could open the doors for the euro to move for its final area, the 127. In case it will break below the 127, then my friends, we are going to see the euro dollar begin a next strong down move. Do you remember this weekly chart? That's a bearish hidden divergence, so it could be just the beginning for something huge for the euro dollar. I'm not buying that yet, as the weekly chart still holds RSI above 50, and MACD, despite of the double red candles, still flat. that could be warning sign, and that's why I say the euro dollar first of all has to place itself below 127 in order we can discuss about further down move. Alright, pay attention for that. Few words about the pound dollar. As I said, on my opinion on previous time, I'm still on that. The higher it goes, the stronger the down move will be. First target to aim for the pound dollar is the 160.50 approximately. Breaking below that, and we are going the whole way back to 159. Pay attention for that, because here on these bottoms, that could be a wonderful buy opportunity. As long as the pound dollar will hold above this trend line, right? The short-term trend line. This bottom should be considered as buy opportunity. Until we get this bottom, look for sell and only sell. If you followed my recommendation from previous week, hold your investor style. For regular style, this trading could be even better because every push higher should be taking money, right? Jump in here and look for the bottoms, jump in again, look for the bottoms until the move will happen. And normally we know the move never happens straight, especially for the pound dollar pairs. Well, I would not say never, it happens from time to time, like here for example, but normally it does not. It's playing around, it's annoying, and then it's making the move. Anyway, keep the bearish trade for this pair. Another interesting pair to follow would be the pound against the Canadian, and I think there is also an harmonical pattern right here on the 4-hour chart. Every push up maximum to 160-150 should be considered a sell opportunity. Could that push first of all to 160.50 or 161.50? Definitely. But we are already on a bearish divergence, so every push up is a sell opportunity. Every push up is a sell opportunity, and remember that. Every push up from here, just sell it, because then we'll go the whole way back to this trend line. Push up, push down. Wonderful pair to trade the cycle. The divergence is here already. RSI is not around the extreme yet, but that's what could cause the up move. But every push up should be considered a sell opportunity, and that's my recommendations. For for pound Aussie, well, I think that the pair could go and reach the 157, 158 first of all, and there I would be rewatching for sell opportunities right there. As for now, no need to fight it, no need to take it. It could and it should push higher. Should we take a buy then? No. There is a weekly bearish pressure. Daily bearish pressure, daily bearish divergence, and we never know when the divergence will take. Will make the effect, and that's why it's, well, we should not go against divergence. It could happen from here, it could happen from the high. If it reaches the high, wonderful. If not, skip it. Very simple as it sounds. New Zealandian dollar. Well, get ready, because from my point of view, New Zealandian dollar is the next pair to make a strong down move. I want to find a daily clear bearish candle pattern, but 0.8417 is a real wonderful top. Of course, if it pushes higher to 0.87, it's perfect, but I don't think it's going to happen. I don't see that happens right now. I think it will make a stop right here somewhere, and it will move inside this expanding channel. Right, 1, 2, 3, 4, 5 right now. Definitely has room to go for a 6, and there is a bearish divergence. So watch out for a clear bearish candle pattern somewhere around this high, 0.8450. I would say that's the maximum I could allow, as long as it's moving on inside this channel, right? And right from here, with the bearish candle pattern and the current bearish divergence already we have, strong down move should come right after that. I keep very bearish opinion for the New Zealandian dollar, and as well I suggest attacking this pair not for a short run, not with small stop loss, but for long run, with enough air to breathe. For this pair, something big is going to happen, and that, by the way, what will cause a bullish move for the Aussie Kiwi at the end. Exactly that. Gold and silver, well, I discussed about that not once. Gold is going, I'm not sure that big, but at least it's going for this trend line, the last trend line here, right? So the higher we push, the bigger the down move will be. I'm still on a bearish opinion. We are in a bearish cycle. Same with the silver. If it makes the push to 35.50 or even 30, close to 37, perfect. Then the sell will be a killer. I think we are going down the whole way back to this trend line and closer to the 20 MA. So every push up is a sell opportunity, and that's my opinion for these commodities. Should go and sell without stop loss, even just attack it based on the cycle. This move will happen, only question of time. And yes, it could take a week or two or a month or two, so don't come with some expectation it's going to happen from now to now. It will not. Normally it does not happen this way, right? And that will be all. That's the opportunities, the best opportunities we have. Of course, it comes together with the opportunities I've discussed about on previous week also, and I update you on the blog for some trades. For dollar yen, we enjoy the 4-hour charts divergence, and you can follow on the blog. I try to update or share some trade every day. Not always is possible. Just make sure to come to the blog to watch for my posts and the trades I share. Euro pound also did the job here. We were talking about this bottom, right, and going back to this trend line, as you remember during the week, right? We got the target. Here we go. That's the line. Target reached. So just make sure to watch the blog. I update a post almost on daily basis with some trades. Just go with that. Few words about the indices. I told you that I'm on the opinion something very big is going to happen, right? And if the Nasdaq will make the false break, we are going strong down. If the Dow will make a false break and close again below this resistance, perfect, we are going down. If S&P will make that, we are going down, and that's what I'm waiting for. I want to see this false breaks, and that's what brings us to a crash. That's my opinion whenever it happens. Same with the DAX. I want it to close below. They all getting ready to that, as you can see. Could it retrace and push a little bit higher? Yes, but as I said, that will be only for a trap, just to gain a bigger, stronger crash. Now another interesting thing, pay attention for the natural gas, which is making some tops. 330, 340, 350, that's the levels need to pay attention to. Right here, okay, something like that, with the 4-hour chart, as you can see. 4-hour chart extreme with the divergence. RSI is dancing around the extreme. We are going to make a down move very soon, and I will not be surprised if we're going, if at the end we'll go the whole way back to close the gap, which still there's natural gas is also wonderful opportunity. That would be all, friends, and I hope you will have a wonderful week and enjoy these opportunities. It's time to be in the market. It's time to trade. I'll see you in the live trading room and on the club. Have a wonderful week. Yours, Vladimir.